Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 14th of January, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A few driving items from the overnight. Key being the U.S. Court, the EU Court of Justice gives non-binding advice on ECB's OMT mechanism and wins conditional backing from legal advisor. The euro hits 9-year lows, and the European market rallies from steep initially losses as no obstacle seen for ECB to enact QE. This was, I talked about this on Monday, that this was a key point to look out for this week. This clears the path for QE to take place in Europe. The euro dropped and has climbed back up to 118.54 on the futures, and is trading at 118.41 currently. So a pretty big swing down and then back up. Equity markets open lower amid U.S. reversal. The U.S. markets dropped. We'll look at the overnight session. Dropped and are continuing to trade near session lows. Lower copper prices put pressure on miners, and JP Morgan reports for Q4 119 versus 132, 23.6 billion revenue versus 23.8. So there's a miss there. MBA mortgage applications came in at 49.1 versus 11.1% prior. December advanced retail sales came in at negative 0.9 versus negative 0.1 estimated. X auto negative 1 versus 0, so those are off as well. December import price index negative 2.5 versus expected negative 2.7, and negative 5.5 year on year versus negative 5.2. So a slightly better and a miss on the yearly. Looking ahead at today's calendar. At 9 o'clock, that's a half hour after the market opens at 8:30 Chicago time. U.S. November business inventories 0.3 versus 0.2 prior, and then we have 9:30 we have weekly DOE crude oil inventories. At noon we have a Treasury bond reopening 30-year for 13 billion. At 1 o'clock we have the Fed's beige book. And then this evening at 6:30 p.m. Central, 7:30 Eastern, Australia's December employment change expected at plus 5,000 versus plus 42.7 thousand in case you're trading the Aussie pair. Remember that tomorrow we're getting PPI, initial claims, Philly Fed, Nat Gas, and we're also hearing from Citigroup, Bank of America, Schlumberger, Intel, BlackRock, and PPG. Friday, Eurozone CPI, US CPI industrial production, Michigan sentiment prelim, and then we have multiple Fed speakers as well as an ECB speaker. We also hear from Goldman Sachs and Charles Schwab Friday morning, and I want to remind you again, Monday is a bank holiday, the pits are closed, and Globex is open till noon Central. Let's have a look at what we've done yesterday and compare it to what we expected. Very important to look back and see what we're looking for versus what actually happened. So the primary hypothesis yesterday was for the market to attempt to make an attempt at pushing lower early responsive selling, but limited effect. The key idea of the day yesterday was for a push, for an initial push to 44.75, the MCLVN separating these two distributions, and then for a push to 52.50, this high volume node in this area, the most valuable price, and then potentially a shot at 2060 if we can take that back. What the market ended up doing, and in Hypo 2, was to take out the overnight high yesterday, find responsive sellers, and then come right back down through this thin area and back down into 22 even. And I had said that if we take back 22 even and start pushing towards 15, we're looking for 12 half and then 99.50. And then the big number we were looking for yesterday was this 84.50. Note that the overnight low last night was 85 and a quarter. The selling yesterday was fairly decent, pretty strong range. If we look at the range here, this is describing the range. Let's thicken this up a little bit. This is describing the range, and this is describing the volume on the day bar, meaning RTH only. This was the widest range since way back here on the in the October sell-off, the big sell-off in October. So the range yesterday was definitely very wide. Bearish engulfing day on Monday's trading, closing at the low end of Monday's trade. If you recall, 2015 is key in this area, and we closed right above it at 16 even. That's where we left our overnight high. And when we follow the story and look at what the overnight high has done, essentially the market opened sideways and sellers stepped right back in to take this back. I'd written in the S5 chat room in the afternoon that this was an impulsive move down and the expectation is for another leg. I requoted it this morning. It was at 2:15 Central. I said, in my opinion, this has another leg down in it. And I said, even though it's moving up into the close, this looks like it's likely to find sellers and step back down again. Again, my target was still 99.50 at that point, with the extended target of 1984.50, the next key high volume node below. And so that's basically what it did. It did recover overnight. We have a double top at 1950. And then it did sell off on the European once the decision was made by the Court of Justice in Europe. We had a nice little pop, and then sellers stepped right back in. One thing that might have slipped through, and I did point it out on Twitter and in the S5 chat room, and it's that it's what KBH announced yesterday. These guys are pretty big. It's a really big developer, construction company, home construction company, and they're basically downgrading their view on new construction. And I think that did not get much attention at all. KBH executive, Q1 housing gross margin seen lower significantly on a year-on-year basis, not expecting to reach margin goals in 2015. I suspect that other home builders are likely to follow that pattern. To me, I've been anticipating a slowdown in the housing market here for a little bit. Seemed a little overheated, and this is the first sign of it. I think this is you're likely to hear more and more about real estate slowing down as it becomes more mainstream information. But I thought that was really important, having gone through the correction when I first started investing in the markets in 1990. That tells you how old I am. Actually, it's in the 71 and FT 71, but that was the home builders were first. Again, we saw it in 2000 with the tech bubble. You saw a quick response from the home builders, taking a hit as people were losing the value their assets to techs. Saw it again in 2007, 2008. and here combined with crude oil, I'm not too enthusiastic about uh, expecting a quick recovery once those slow down. In any case, I want to make sure that everybody understands that I'm not a market analyst. I'm not an economist. I'm a trader, and I'm speaking outside of my normal time horizon. So I want to put that into context and not sound like um, my view should override yours or whatever. Again, these are trader bites. The reason I call them trader bites is it's something you grab on the way to trading. It's a small snack that you might incorporate into your analysis if you're inclined to do so. So let's look at what we're expecting here overall. The market has pretty much tested both HVNs on this composite from the top, 88.75. We still have a very incomplete auction on the top, I believe. The 88.75 is still vulnerable. So at some point, I expect that we will likely take that out, at least statistically speaking. But for now, the market's struggling in the middle here. We have tested the MCV POC, the key price of 2060. We've come down, tested the next key price. If I pull this across here, we've tested the next key price at 15. And we are kind of we took that back, started to move towards the 2060 yesterday, and we have taken out the 15. This is pretty bearish, and now we're trading near the most recent low. 84.25 was the low of this last swing. To me, this is a pretty bearish formation. In fact, we can put a measured move on it for targets. Gives us 56.50. Looks like 56.50, and where are my other targets? Okay, they're much further out, but 56.50 is the 100% on this pullback. But I feel like I believe that having gone through the 2000, we're starting to bring this lower section into play. We'll see how the overnight low is treated today. It's very important to see if responsive buyers step in. If this is still seen as too cheap and there's still room for growth seen by the bigger players, then we're likely to see responsive buying right back up into this 1850, 15 and 1850 area, and for us to work our way through yesterday's profile. It's very tough this morning, given the situation here, to determine which side has the better probability. But the automatic expectation is for overnight inventory to be short, and for this market to experience a little pop, a little push up towards yesterday's range, and then I'll be watching very carefully what happens at yesterday's range low, and if it's able to recover that and get back up into 2015. If it does, then yesterday's profile will govern the trade and what areas we're looking for, and that's what I'll start tweeting about. But if it's not able to recover yesterday's low, then the expectation is, if it's not able to get back up above 2000 and hold those areas, then buyers are stepping away, and then we expect it to rotate back down and get into this 84.50. Beyond 84.50, looking for 73.25, and then the prior low at 63, and then we start to look at 56.50, which you can see here. 56.50 is the 100% extension, plus it is a composite HVN, and that would be the lower target. Okay. Beyond that, we have a 50% pullback of this entire swing up of 47.50, and that would be the next thing I would look for. But if we do manage to test up into 2000, the expectation is for about 30 points of range. So I'm looking for around the, for the market to stall out in the 70s or so, 56.50 being the extended target again. So that would be the primary idea for today. This is basically an impulsive move down. What we had here on the long, on a bigger picture, this was a pull. This looks like it's a pullback, and then so my expectation is that we would get the continuation move down. Again, 56.50 being the target. I'll leave you with that thought. It's 8:16. I'm out of time. Good luck, and I'll catch you tomorrow. Take care.